Welcome to Northwest Arkansas Investing Podcast, your go-to source for real estate investing in Northwest Arkansas.
Whether you're a seasoned investor just starting out, we bring you expert insights, market trends, and practical strategies to help you build wealth through real estate.
From buying and selling to property management and long-term investment planning, we cover it all so you can make smart, informed decisions in this fast-growing market. Let's dive in. Welcome back to NWA Investing Podcast. I'm here with my co-host, Brian. And we've got a great guest today, Karina Sosa. She's with us. She's got a breadth of experience, over 25 years of experience in real estate investing. She's got owner of Sosa Properties and everything that kind of encompasses that, which we'll get into. But multifamily, short-term rentals, commercial, industrial, land acquisitions, you name it, across the United States and Mexico. And she's got a deep knowledge of just about every category we can think of, which we're excited to get into and get to know her a little bit. But Karina, thanks again for being on here with us.
It's a pleasure. I'm excited to be here.
Yeah. Absolutely. Well, give us just a kind of a high level view of you and kind of what got you into really your background a little bit, and then what got you into real estate in general.
Well, honestly, I think like most people. We started with a couple of duplexes and then just started building up from there, starting acquiring some single family homes, some land, and then pieced it up and it sold quite nicely. And, it just kept snowballing. And anytime that we sold anything, we 1031 it into the next deal. And it just kept getting bigger and bigger until it became a full-time job. But I've been doing it for, 25 years. When I first started, I worked a corporate job. I was at J.B. Hunt for 16 years and then banking for another 6 to 8 years. But in the meantime, I was, doing the real estate, showing on the weekends and the evening, I know my kids laugh because I have them in the car seat like, okay, we're going to go pick up some rent money and then we'll head to Chuck E. Cheese after this.
I love it.
So they kind of grew up with a lot of that. And through the years, those are the conversations we have at the dinner table. And so they've learned a lot as well. And, we've made some memories along the way.
Yeah. That's amazing.
But
you were in the operations, it's not just showing for a realtor. You were showing prospective residents, and so you were pretty heavy on operations. From my understanding, is that what you're saying?
Yes.
There too?
Yes. Yeah.
Tell me about that. What made you? I think from what I understand, your family started investing, or you started investing. What made you get drawn to the operation side of it versus?
So, I think it was just, honestly, it was an opportunity. And then my husband was more the visionary of the big picture. And then, it sounded like a great idea and let's try it. But then I was kind of the one that always took the reins and ran with it. And, but he was for sure, the negotiator and, he knew how to pick some winning horses. So
that's awesome.
Yeah. So that was kind of the role that he played. And then I just kind of ran with it and, did the day-to-day operations on it. He was heavy in manufacturing and, we had a factory going at the same time. So we're really busy. And that was just kind of it fell on my lap and I ran with it. And, we collaborated a lot, of course, but yeah, the day-to-day was definitely.
That's a really good experience, actually leasing it out and collecting from residents. I'm sure, I don't think you do that today. Or do you?
I have a team now that
you're not knocking on the doors.
I'm not, but when we acquire a new property, I'm out there, meeting new tenants, getting to know the property. So I'm really hands-on. I like to kind of know how the wheel turns. Every property's different. So in the beginning, I'm very, very hands-on, and I am out on the property. I'm inspecting units and, walking with the contractors and that kind of thing. And once I get comfortable with it, and, I know kind of how that property is going to work, then, I'm not out there as much, but I am very, very hands-on.
Yeah, I love that. And then it sounds like even at the beginning, though, doing all of that was more out of necessity. Like you're managing your own property and not turning it over to property management. I assume to maybe get some extra cash flow, but also learn kind of the business in general.
Yeah.
I think that's would you say that's a great thing for any real estate investors as they're getting started?
Absolutely. I think especially when you're getting started, those management fees will cut into your profits. So, sometimes people try it out and it's just, like the cash flow isn't there and then they just kind of give up. But when you have control of that, and I mean, I also I'm not afraid to work with the contractors and, do sub a lot of my work. So, that's a big cost savings there. So it was out, you just kind of make it work. And then the bigger the projects get, you have more negotiating power and pricing and that kind of thing. So you're able to, make it cash flow so much better. But yeah, absolutely being hands-on and knowing your property. And that way you know how to run it. If you're not there, you just...
Absolutely.
Yeah.
How many units did you have before? Because you were doing the banking and manage it, being property manager hat on and operations hat on. How many units till you went full time? Do you remember?
Oh gosh, that's a good question, Brian. I want to say, I think that's when we really, really started growing, and maybe we went, because we started with a lot of multifamily and then eventually jumped into commercial. But I want to say we had at least 150 doors and then swiftly moved up to at least 300. And, again, a lot of multifamily. And so, yeah, I think that's when it was okay, it's going to be a full-time job.
Yeah.
And we figured, I was going to be able to run it more efficiently being full-time and probably make up for my salary that I had in the long term. And it pretty much worked out that way.
Absolutely. So it sounds like even from the beginning, though, JB Hunt, y'all started thinking about real estate, maybe stacking some funds on the side and starting to buy duplexes. Is that kind of how it started for y'all?
Yeah. Actually, going back, it started with, we bought some land because we wanted to build a bigger home. Mm-hmm. And, we ended up buying several acres, and then there was people asking is this for sale? And, so we're well, we can split it and sell this piece. We don't need that much. And, it just kept selling, and we're whoa, this worked out really well. And, so then just kind of saw the opportunity in real estate at that point. And then there was some duplexes that came up for sale, down the road from where we lived. And it was scary. That was our first big purchase. And we actually put some of the equity from our home, as mm-hmm. part of our down payment. So that was scary back then. It's oh, but this is our home.
Yeah.
But it worked out. Eventually we refinanced it, on its own and that kind of thing. And then, yeah, it just kind of took off from there, and, did, flipped a few homes, and just then moved on to the multifamily from the single family, and commercial and Airbnbs. And then my husband's company took us to Mexico, and so we kind of continued, which that was pretty exciting to to continue the real estate over there. And it's different, but the same at the same time. But so we started developing there and invested in some like beach properties and did Airbnbs. And so a lot of growth for sure.
Yeah, to 150 and 300 units. Are you guys using how did you capitalize? Was that the family's funds, or did you start raising capital at that point, or are you pretty much your guys' own capital from other deals and the manufacturing business?
So honestly, like really the secret to how we got started is we both worked really hard, but we lived below our means. Like we didn't spend a lot. We were in a smaller home. We never bought a brand new car. But instead of having a car payment and like a huge mortgage, we were taking that money and investing it in real estate.
That's so big. Yeah, especially for beginning, like people just getting started when they first get their first taste of success, it can be tempting to like spend that, but you'll get such a bigger snowball effect if you just live below your means and invest that difference, and you'll be able to scale a lot faster. From what I've seen.
Yes.
Yep. Absolutely. I think too, obviously having a career that can provide, I think that would be, for most people, should be the first focus, is to find a good career that they can start to stack away. And then again, I think that advice is really strong, of just living below your means and then being able to kind of make it happen, especially in Northwest Arkansas, in a place where obviously prices continue to rise and it continues to become more and more difficult. Capital is going to be important, obviously, to have, and both you know that. So,
what markets were those, by the way? To Northwest Arkansas, I think Fort Smith. What kind of markets were you guys targeting then?
Obviously, we just started here in Northwest Arkansas because we lived here and it was convenient and that kind of thing. And then, we did Fort Smith, and then as prices have continued to go up, we did find some good deals in Texas and Oklahoma.
Okay.
So in the we still have a little bit there, but it's so much easier to have it here.
Yeah, absolutely.
But there's still good deals. So
yeah. So tell me about your kind of, as you guys were getting started. Obviously, you started in duplexes and maybe some single family, but what was the approach as y'all were starting to buy property? And then tell me a little bit how that's transitioned. I know you've done a little bit of everything, but what was it? Just looking for cash flow originally, or was it looking for, we're specifically looking at multifamily? What was that approach when y'all were first looking at deals?
Yeah, obviously we were like interested in, acquiring assets and having some passive cash flow coming in. I think in the beginning we never thought it would turn into something, like this big or full time. And we hung on to most of our stuff as the years went by. Like if we sold anything, it was always like to upgrade to something like bigger, or like we sold a lot of the multifamily to, acquire commercial, that kind of thing. But I think another important thing for investors to remember too, it's like you don't just want to build your cash flow, you want to build your net worth. So, you hang on to things, you get lines of credits on them, you can still use your equity, but you're building your net worth as you go along. And
is that part of the thought process? Before we started recording, we were talking to Karina about a commercial flex development that you're in the process. Is that the thought process too with development? It's not cash flowing, but you're building the equity that way.
Yeah, and that's another thing that I've learned. Like sometimes, I feel like people get really close-minded because they're like, oh, this thing doesn't really cash flow, like it's only going to make $1,000 a month. Like, yeah, today, but like even if you're not like cash flowing huge, like it's going to appreciate, and like before you know it, you've made $200K. So it's not always I know, like, I remember we bought, and, I'm kind of dating myself. This is like back in like 2007, 8, and when the whole real estate market went down, and we had just purchased a house in Springdale for 120, which back then that was kind of a lot. And we're like, oh man, we got stuck with this, like, but I mean, I was able to rent it, and we, it made the mortgage. I can't remember. I think I was making like, I don't know, a couple $100 cash flow, like nothing major, but it, it paid the mortgage and the taxes and insurance and kind of thing. But then when we did sell it, like, I think we doubled our price, so it's a funny, like, don't let stuff like that scare you away sometimes. And then building, I think, I mean, that's always scary because it's something brand new, but I think in new development, and I know, Brian, you're getting into that, it's not going to be right off the bat, but it'll happen. Like before you know it, like the cash flow is coming in, and so you sustain it for a little bit, and then it, the equity goes up.
Absolutely. I think that's a great point though too, because especially in Northwest Arkansas, oftentimes rents are continuing to rise over time, but oftentimes it is just harder to find cash flowing deals nowadays. But I think in general, as investors, if you're looking for if you're buying deals right, let's say for a value add opportunity, if you're buying deals right with instant equity, that's a big win. If you're building something that you're building instant equity, another big win. So I think as investors, it's, cash flow doesn't tell the full story, like you said. But maybe as people are starting, that might be, something that they're a little bit closed-minded about. But oftentimes, those opportunities could springboard you into a big opportunity that, could get the cash flow that you want or need or anything like that.
You definitely have to look at it, the whole picture, not, like you said, just be closed-minded. You're looking at especially in NWA, where it is more of a appreciation market than a cash flow market, where as Fort Smith, if I'm buying something in Fort Smith, I can't count on I need that cash flow, I better be cash flowing, because I'm not going to get the appreciation on the back end. But, if you compare that to NWA, I better be getting some good appreciation if I'm giving up some cash flow. So I think it's important to look at the whole picture, not get stuck on cash on cash number, or don't get stuck on your cap rate, or don't get stuck on IRR. I think it's important to look at the whole picture, and
exactly.
And also if you're buying right, you can weather certain storm where you might have not as much cash flow as you thought, or you're not able to sell right away like you did in Springdale.
Yeah. And one thing that luckily in this area, like, there's a renter for every type of property.
True.
We had bought a lake house, and being in this industry, like, if you have an empty property, like, it just bothers you, like,
for sure.
but you just don't think like, oh, I can't. And this was before Airbnb, so that wasn't really a thing. And besides that, I think our HOA didn't allow like short-term rentals for like vacations and stuff. But we found, like, we were like, well, let's just put it up for rent and see what happens. It's just sitting there, like. And we had a family that like came and like literally wrote us a check for the whole entire year, and they homeschooled their kids, and they wanted to be by the water, and the dad traveled, so the mom was going to be there, and it was like, yeah, like,
yeah,
there's someone for every property.
That's a great point.
Being that close to tenants too, you don't get to feel that too if you're not as in touch with property management. But on the other side, you also don't get that. There's as many good stories as that. There's some bad stories.
Yeah,
for sure. Like bad tenants out there. That
all I've heard about, just speaking of those bad stories, my dad used to own a fourplex down in downtown Bentonville, right next to Skylight Theater now. And he managed everything himself back in the day, and he lived in Springdale, and he would have to meet all the tenants up there and show them the property and stuff like that. He just kept getting stood up there, and then he had somebody that was growing marijuana in the closet. And he was just like, I'm just going to sell it. And then, we know what happens now, years later, 20 years later or whatever. So he's kicking himself over that. But I think that's just a funny kind of experience when it comes to managing your own, especially the beginning.
Absolutely. There's a lot of that. So there's never a dull moment. And now I just kind of look at it like, okay, it's part of the plain real estate. Like there's highs and lows and good stories to share later down the road.
Absolutely. Do you utilize third-party property management now, or do you have in-house, or does it?
No, everything's in-house.
That's just has a team. So yeah, I'd love to get a little bit more into that too. Sosa properties in general. I know we've talked through some of these items or some of these kind of areas of expertise that you have now in commercial. Obviously, you've done multifamily, single family, short-term rentals, even Mexico, and maybe here. I don't know. We can talk about that too. But and then there's a property management side or team part of it as well. Give us just kind of an overview of Sosa properties in general on what that looks like for y'all.
Yeah. So again, like I'm very, very involved. It's like my day-to-day operations. And I think because I did it by myself for so long, like I have, like a small team. Sometimes I think I probably need a few more people. Like we're just really close knit, and like every day, I know what's going on, and, communication is key. And it helps having your own maintenance team that you can, like on the, one phone call, and you can send them here or there, and not have to wait on somebody else to fit you in, that kind of thing. And just, marketing and scheduling showings of, like keeping everything full to the best of our ability, collections and accounting and
Absolutely. So on the property management side, is there an arm that's outside of the units that you're involved in? So I guess, are you managing units for other investors out there as well?
So I only manage my stuff. I do have partners that I've gone into on some deals, and I do the asset management on that side, but I only manage the stuff that like I'm part owner.
Yeah, that makes sense.
I don't do for, like for other people.
Yeah,
Smart.
Yeah,
it's big.
I think that's super smart. So as far as I knew I love that piece. I mean, that's a great for those that are thinking about doing or have a portfolio that they're managing themselves. I think that's a great some great learnings to kind of continue to get into deals. Maybe there's a partnership aspect that folks can kind of help the management side and be able to get into more deals, if that makes sense. But as far as other arms of Sosa properties, short-term, I mean, help us understand as far as short-term rentals and some things like that. That's an area that we haven't talked about much, but where did that kind of stem from, I guess, originally?
So originally when we moved to Mexico, we had our family home that, we really didn't want to sell, and we'd kind of, we'd come and go because obviously, we still had business here as well. So we turned our house into an Airbnb, and it was like very convenient because when we knew we were going to be in town, I'd block off that week and we'd get to stay in the house, and then when we were done, we'd pack up and,
Yeah.
And it's a bigger home, so it was nice, like it's in Fayetteville for football weekends, it was, when families came down at graduation and, any events at the university. So it worked really well. And then, we had some vacation properties in Mexico too that, we only used occasionally. So having them on Airbnb, we were still, making money to pay the HOA dues and the maintenance and the pool and landscaping and that kind of thing. So
makes sense. So really kind of started with a personal home.
Yeah.
And they kind of, I guess, expanded from there and kind of looked at opportunities. You mentioned maybe on the beach down there in Mexico as well, stuff like that. And then any others around the United States or anywhere else that y'all
Nope,
spent
that
down
was about it on that.
Yep. So I guess help me continue to understand the timeline here, because you've been in so much. I'm trying to keep it all straight. So small multifamily start, some single family, maybe short-term rental was before or after when you started to get into more commercial deals. But when did the commercial piece kind of start being a part of Sosa Properties business plan?
It was probably around 2017, 16 or 17. That's when we moved out of the country. And with multifamily, it's like you're, babysitting, like 50 families and, like 50 fridges and, that can possibly go out or what have you. So we were like, okay, like commercials, not as hands-on, like it is in the beginning, you're trying to, like, if there's a build out or, things like that. But once they're kind of in and on their own. And on the commercial side, the nice thing is like they're responsible for most of their maintenance. Mm-hmm. Like obviously we do like the roofs and, like big HVAC, stuff like that, landscaping. But so we started selling off multifamily and then 1031ing into the commercial. And it worked, like once we got the units filled, like the tenants were kind of on their own. So we were able to like back off on like as much maintenance and, like day-to-day obviously it was still, you keep up with it, but not as tedious.
Yeah.
So that's kind of how we got into that.
2016, 2017, that's when I bought my first 12 unit in Springdale. Come on. Guess who I bought it from?
I love it.
That was right around that time.
Was this a letter, a cold call, or how did we?
No, it was Chris Vega, shout out.
Broker?
Yeah, broker relation. I still talk to him. But yeah, just they had it on the market and then it, I wasn't quick enough and then it fell off the market and I think the previous buyer had fallen out of contract and I was like, hey, I'm ready to get, I saw this is available. And we met at the property and then closed it and then
love it.
Yeah, that was my first venture into multifamily and it was a good process. And later, actually my first deal in Fort Smith, it was a 59 unit and they were the sellers.
Oh, no way.
Just a couple, that's also maybe a year and a half later or so, maybe 2 years later, but
love it.
Yeah.
So yeah, just speaking on that too, as far as the deals go, I'd love to, as much as you want to share, I don't want to share, but tell us about any deal that stands out along your timeline as far as either your favorite deal or maybe a deal that kind of was your big break, from start to finish. What did that look like and what kind of property was it? Stuff like that.
Wow. It's been like the growth has been so organically that, and I'm a big multitasker. So it's like, even though we had the commercial, we still had some multifamily and then we're like developing in Mexico and, the Airbnb. So it all kind of ties in together. So it's hard to say like, oh, and then I jumped into this. It was like,
what's the most amount of money you made on a single? What's like the best deal you've done as far as like return on money? And then maybe is there any worst one? How was the 59 unit or the 12 unit I bought from you guys? Do you remember that one?
Yeah.
They got you, man.
Well, I did.
You do something.
I don't remember the amount.
I think the 12 unit I bought for like 500 or 595, 500 or 595, and then 59 unit maybe like 2 point something, or a little under 3 million or so.
Yeah, I'm trying to think like which one was like the biggest. That was one of the bigger complexes that we had that we did well on. But I think the biggest one was, or the biggest one that we profited on was probably Rivendell and Rogers. I don't know if you remember that one.
How many units? What'd you buy for? What'd you sell for?
That one had 33 units and we bought it right at $1 million.
Nice.
Yeah.
It's awesome. That's great.
And that was our big like $1 million purchase. Like everything had been in like the 100,000s, and it was like, oh my gosh, like it's $1 million, like, you know?
Yeah.
But it's funny how like you grow, and like this last deal that we closed on in March, it was close to 10 million. It was like 9 million. And when my partner called and said, like, you're not going to believe this, like, we got it under contract. Because, you know, it's a lot of going back and forth of like, well, what about this price? What about that price? And it's like both of our stomachs just sank, like, oh my gosh. Like,
we're really doing this.
Yeah, like we're really doing this. And but then you just kind of like grow into it.
Yeah.
But
awesome.
on back to Rivendell, that one sold for 3.2, 3.4, something like that.
Nice.
Yeah.
Amazing.
That's awesome. And did you use debt when you purchased it, I guess?
So yeah, we did. But we were also always very conservative. Like we usually always did like 20% down. So we always had room, you know, like we never felt that helped a lot too. Like you're not stressed out of like, oh, this is going to be tight. Like,
Yeah.
There was always like good room there. So
It could sustain itself, I guess.
yeah.
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 I love it. What about any unique deals come to mind as far as, you know, have you been a part of any that the owner has seller financed a deal or anything unique like that stands out that you can remember on any deals?
You know, we were very fortunate. We had really good banking relationships, and because we had such a big portfolio, it was like we used that equity. Like that was really how we grew it. You know, like we hung on to everything and built the equity, and then we would just like, yeah, we'll put this one as a second and like use that as your down payment. So that was really what helped us grow quickly without having to, you know, like sell stuff and pull cash out and that kind of thing.
So it got more creative with the lenders.
With the lenders, yeah.
Mm-hmm. Smart. Yeah.
So just as far as your strategy and kind of your philosophy moving forward now and kind of where you're at in your career, for you, I mean, when did it, you know, for a lot of people like Brian we can't say you're specifically multifamily because I know you got some storage and some other stuff, but Brian is almost exclusively multifamily. A lot of others would say that they're, you know, pretty niche in what they do, but you have a breadth of things. And so for you, I mean, was it ever a thought to try to be niche into a certain category, or you chased opportunities in general? And when do you think that's, you know, do you think that's a good strategy for most people out there?
For me, it was like, yeah, if there's an opportunity there, like explore it, you know, like don't be like shut off, like, oh yeah, that's not for me. And, but again, I'm a multitasker, so that doesn't bother me. And I'm sure some people, it would drive them crazy. And then like, there's also like a really creative side of me that, you know, like I wanted to build, and, you know, like when I was in Mexico, it was, you know, very affordable to have a staff with like an architect and all of that. So that was a lot of fun because I had an architect like right next to me, and we're like, you know, like designing homes and, you know, like building them. And, you know, so it was like I got to do a lot of input there and, you know, like the creativity of that. So I think that was probably my favorite.
I love it.
Yeah.
And then, I think just as far as, you know, looking at, you mentioned kind of how you approached a lot of these deals really in a more conservative lens. You know, again, I go back to Brian because you guys are my two examples here. But I know, Brian, when you were getting started, there was as much leverage as possible with growth. It sounds like with y'all there was, you know, kind of a conservative, you know, put 20% down or really kind of, you know, I'm sure there were times too where there was more leverage, but is that a strategy? I know I'd love to hear your take on your side as well, but is that a strategy you would recommend for most investors out there, especially in today's market? I know that requires more capital, but I'd love your thoughts there.
Right. Well, that's hard to do with like today's rates, you know, and the pricing, you know, of real estate right now. But I think really the key to, somebody that wants to start investing is like have a stable income that, like you feel confident, because then you're able to take risk and not, like it's not going to ruin your marriage. It's not going to, so when you have a stable income, like, every 2 weeks your check's going to be in the bank, and you know what your, monthly debt is, and then anything extra, like, we'd get excited, and, instead of like, purchasing a new car, it's like, oh, we found this like rental house, and, like we can redo this and redo that. And then you just like get excited about it, and, you're shopping, but you're shopping for real estate. And, so, I mean, I know there's like Brian did, he got really creative, like with some seller financing, and, like that's a great way to do it. Like personally, I didn't experience that, but, I know with my partners now, we have used a little bit of that, like maybe like the first couple of years, you do some owner financing at a lower rate because of the way the interest rates are. So that's definitely a way to approach deals in today's market.
Absolutely.
And then, banks can be creative too. Like if they know that there's potential in the project, like don't be afraid to, leverage it a little more, and, they're not going to spread themselves too thin, but there's ways to make it work.
That's great. Yeah, I love that mindset too of like, you mentioned it earlier, living below your means and investing the difference. And instead of getting excited about a new car, you're getting excited about a rental.
Yeah.
So absolutely, definitely recommend having a partner or a spouse that has the same alignment. They don't have to be in the business with you, but making sure they're on the same page as you with that. Like just because our means increase doesn't mean we're out to spend. Like if we can invest this, we can really, you're going to have even more means to spend. And I think, the leverage piece, I levered up a lot in the beginning, especially when it was my own money, because I knew I had that stable income too. I wasn't like, I was living below my means, and I had income above and beyond what my expenses were. So I knew like I could, if worse comes to worse, like that was kind of my reserves. My reserves was my global debt to income ratio. My reserves was I'll work my butt off and put it towards a property if something bad happens, and I'll just work extra and put that extra income to there. So that was kind of my reserve. So I think, having smart leverage is important. Like I still like it depends on I have some investors that, would prefer to be put more into it, but some investors are like, I want to get the highest return on equity. I'm not as concerned about cash flow. I'm okay with the extra risk if we're accounting for it, for extra, that higher debt payment that you have with that higher leverage. But sometimes you can get creative with the sellers, and maybe you're not paying them maybe it's full accrual. Like, maybe it's, hey, I'm giving you more on the purchase price, and I'm giving you an interest rate on that, but it's going to be paid at a balloon payment. So you're not sacrificing your cash flow. Not all sellers will do that. I try to get you guys to do some self, and they're like, nah, they didn't do it. So it depends. I think it's a tool. I think it's a tool in the toolbox. Like it's not, that shouldn't be your only tool in the toolbox, but it can be another way of getting a deal done. Same thing. That's, Karina's philosophy of, not being closed-minded, like being open to deals, especially with you honing in more on NWA, was you had a lot of success in the duplexes and multifamily, but to stay in NWA, you had to be open-minded to look at these other opportunities to have more tools to place your equity and grow it.
Yeah,
exactly.
Absolutely. I think one thing I had a question about, just from what you mentioned earlier, was just banking relationships in general and how that's changed over time. What did that look like when you guys were first starting out? You probably were maybe putting a typical amount down, 20 to 25% or whatever on your duplexes. But as time has gone on and portfolio has grown, how have those relationships changed for you?
I guess giving you a little bit of background too that I think helped is because I did work in banking, and I did secondary market mortgage loans.
Mm-hmm.
And you had to get really creative. Like if your debt to income ratio is too high, like how can we get that down? And, being in banking, I'd talk to my clients and I'd be like, let's refinance your car and your boat and your credit card into one loan. And then you just have one big payment instead of 3 or 4, and that'll bring it. And then we get the ratio down and then we'll make that work. And so I don't know, like I always had kind of that mindset of like, how can we make it work instead of like how it's not going to work.
Yeah.
So
that's a problem solver's mindset.
That's right. Got to have in real estate. And then too, I mean, I know for those out there that are just kind of getting started and maybe you're looking to create some banking relationships, in your experience, has it been beneficial to have one that you really trust and lean on, or has it been beneficial for you to have multiple that can really treat you in different ways and maybe want different product and stuff like that? How has that kind of evolved?
Yeah, so you're always going to have kind of that one that you usually like go to first. But then there's going to be a few times when they're like, oh, I wish I could do that. But, or somebody's trying to earn your business and they have a better rate and, better product. And, if you have a good relationship, they'll be like, no, what, I understand. Like, that is a better deal. I can't match it. But like, yeah, I would take it. So, no hard feelings there, and then always, come back and offer them and, like, again, open-minded. So you're not always going to just be able to work with one because there's different products, different rates, and every bank is in a different situation where like maybe one needs more deposits and one needs to do more loans. And so it's different markets and, the different, stage that they're at. So, but I have my favorites.
Yeah, absolutely. I think that's wise.
Like family.
Yeah, absolutely. And I think bankers, we've talked about this before, but bankers and lenders are some of your biggest partners in the deal, obviously. And so having people that are looking after your back and that can, will go to bat for you as well on deals that, are good deals that maybe others don't see the vision. So I think that's super important. For you all, Sosa Properties, what does the future look like for you all? What are you hoping that the next 5 to 10 years looks like in the business?
So now I'm starting to work on like bigger deals, with partners, that syndicated deals. I'd like to do some more development, like on the building side, just because I really enjoy that. I know that like Fayetteville has a need for single family homes, and so I would like to dabble into some of that. Nothing big, just kind of like, I don't know, get my feet wet and see how that goes. 1 or 2 homes here and there. Just the other thing about, like everything that I had done up to this point was, just within the family. And now that, I've partnered up, like you can grow even bigger. And honestly, it's actually nice to have that support of, like, hey, we got this going on. And, you have a team of people that have the same interest, because, when they own the property too, like we all have the same goal in mind, so we're working in synergy. And, like you're able to like grow even faster.
Absolutely.
So
any advice on partnering up with the right people?
Absolutely. So one thing that I've learned, it's like we all have our strengths and weaknesses. So like you want to find somebody that they have the strength that is your weakness and so forth. And obviously, like good communication, transparency, and, being aligned. Because as long as you're aligned on your goal and you both have, you want to reach the same, end in mind, like you're going to make it happen.
Yeah. And I think being aligned too is is how you structure that partnership. One, like to your point, like the strengths and weaknesses have to line up and having the same goal and vision. But, you know, if someone is just fee-based and they don't have any equity, they may not be as aligned to continue to perform, you know. So I think it's important, you know, with your my partners, I like to see have equity in the deal too.
Yeah, absolutely. Because then you're all, you know, on the same team, and, you know, like we're all, you know, going for that touchdown.
Absolutely. I love that. We've got just a couple other questions I'd love to get your thoughts on as we kind of wrap up here. But what would be some advice that you would have for a new or aspiring investor in Northwest Arkansas?
I think if that's what if that's what you really want to do, like enjoy the process. Like, you know, we were talking earlier, like don't look at it as a job, like, oh, a chore. Like get excited, like, oh, you know, I get to go buy this duplex, you know, and you know, like, and I think one philosophy that I feel like I try to live by, it's like, how can I make this better? And like you walk into it and like, obviously it's not, rental properties aren't always like the shiniest and prettiest things, but you know, you can do so many things to them and make them better and like, you know, inexpensive ways. And so it's like you walk in and it's like, oh, what's the potential here? And, you know, like play with it, have fun, you know?
Absolutely.
That's great advice on living life in general too.
Absolutely. Yes. I love that perspective. And then just what are some key habits or practices that you've acquired over the years that you think have led to your success?
So I think communication is key. I learned that like very early on, you know, especially like in properties where you're like, yeah, this is the color we're gonna paint, and then you walk in and they've painted this mustard yellow color, and it's like no. So I've learned to just like communicate exactly what I need or what I want, because everybody wants to do a good job, but if you don't communicate correctly, then you know they're not gonna have that information to pull through for you, and then frustration comes in. So like the more that you can communicate, and especially when it comes to like remodels and stuff like that, I try to over communicate and like make yourself accessible. You know, like if they call, pick up the phone. It may be just a, you know, short question that can save you hundreds, thousands of dollars, you know, because they don't know what direction to go. And then two, like you're going to slow the process because maybe they can't start without you approving this or what have you. So communication. And then like at the end of the day, it's like the team around you that makes you. So I think just having good relationships with the people that you work with, and I think being, you know, grateful and appreciative. I think we all kind of like get in a grind, but, you know, like telling people like, oh, you're doing a great job when they are, because, you know, like we just don't say it enough. So just encouraging them, you know, and I tell a lot of people, like, I think managing a team for me, it's like just being a mom, you know, like, hey, did you do your homework? Let me check your homework. And like, and then when they need encouragement, like, you got this, like, you know, like, or just like, well, talk to me, what's going on? And, you know, like finding out you know, like, okay, well, what can we do to make it better? Or if that didn't work, what will? So just, you know, building people up. I think when you build them up, they're going to build you up, you know. You don't realize it at the time, but that's the way it always works out.
Absolutely. Yeah. I love that. That's great leadership advice. And overall, I think if anybody wants to grow or have a team, or even, I mean, great advice you can use within your family, building one another up and you know, just kind of loving on one another and, you know, giving each other kind of some of those encouragements. And then I like what you said too about communication. I mean, such an important thing in real estate, in any category in real estate. I mean, I think a lot of people would be surprised at picking up the phone, how far that goes.
Yeah, it really does. And then you want to be a good listener, because like all your questions will get answered if you're just listening. And I think that's most important. Like, listen and then gather your information, and because a lot of times it's perspective too. Like, they're looking at it from one lens, but if you listen, then you realize, like, oh, I see where they're coming from. And you're able to, find a solution, and then you work in harmony. And there's nothing better than that.
Absolutely.
Amazing advice. Yeah. And it's the woman perspective, like having the gratitude, listening, and like, having the empathy. And I think that's, if you can use that, it can really be beneficial in real estate, and makes it more fun.
It does. And like, when you appreciate people, they appreciate you. And I mean, like, I don't know how many times I've called and like, hey, I'm in a jam, like, I've got this big leak going, like, I'll be right there. Just stuff that, like, makes you.
Yeah.
But whatever you put out, that's what you get back.
Absolutely.
So
I love that. So for anybody that's listening and wants to get in touch with you or reach out maybe with any questions, where's a good place? Maybe they can email you or reach out to get connected with you.
Yeah. So I think I'm not big on social media.
That's a good thing. Yeah. That's good.
I do have a LinkedIn page. That's probably the one that I kind of like visit the most.
Awesome.
So, that would be a good one.
Perfect.
Karina Sosa at LinkedIn.
Yeah, and my email's karina@sosaproperties.net. So
awesome. Yeah. Well, Karina, we're super thankful that you spent some time with us. I know your time is valuable, and there's a lot of great nuggets in here, and you just got such a breadth of experience: short-term rentals, multifamily, single-family, commercial, and we're just pumped that we got to have you today. So thanks again for your time.
Well, thank you guys for having me. It's been a pleasure, and it's been fun.
Absolutely. Thanks, Karina.
Thank you.
This episode is brought to you by Windstone Private Lending, one of the top private and hard money lenders now serving Northwest Arkansas. Whether you need short-term capital for a flip, a bridge loan, or creative financing, they've got you covered with very flexible products to fit nearly any deal, including 100% financing. What sets them apart is their deep expertise, fast response times, and ability to think outside of the box to help investors like us close quickly and efficiently. If you're looking for a real lending partner, check out Windstone Private Lending. Link is in the show notes. Our next sponsor is Advantage Title and Escrow. They're a local company. They do great work. Specifically, Kayla Phillips. I can speak personally on this sponsor because I use Kayla for all of my transactions. It's been 2, 3, 4 years now, and Kayla and I have done a ton of deals. We probably do between 65 to 80 deals a year together, and they do a great job. The SOPs, so systems and processing that they have over Advantage Title, is just incredible. Clients love it. They do a great job from start to end communicating. When I give a deal to Advantage Title and Escrow, I know that it's going to be taken care of. There's no second guessing. I almost am able to treat them like a second transaction coordinator to my transaction coordinator that I already have. I know that they're going to handle the systems and processes correctly as an agent, as a homeowner, as a buyer or seller. They do an incredible job of handling a transaction and communicating throughout the process. They do a great job with communication, especially Kayla Phillips over there. I would highly encourage you, if you're looking to close on a home, buy a home, if you're an agent listening, to use Advantage Title and Escrow, specifically Kayla Phillips. So you're going to reach Kayla best at 501-358-1601, or you can email her, Kayla, Cayla, at goadvantagetitle.com. Advantage is ADVANTAGE title.com. Banks are about community, and Century Bank of the Ozarks has been your community bank for 131 years. That's over a century, since 1894. They've been helping neighbors build homes, grow businesses, and plan futures. Because they're locally owned, your loan approval happens here, not miles away. Visit their locations in Fayetteville and Mountain Home, Arkansas, as well as Gainesville, Theodosia, Bakersfield, and Ava, Missouri. Century Bank of the Ozarks, local bankers make local decisions since 1894. Member FDIC and equal housing lender. If you enjoyed the show, make sure to give us a follow on your favorite podcast platform so you never miss an update.
Don't forget to connect with us on Instagram, Facebook, and LinkedIn for more real estate insights and behind-the-scenes content.
Have a question you want us to cover? Send it our way. And if you're interested in sponsoring the show, visit nwainvesting.com to get in touch. Thanks for listening, and we'll see you next time.